Hello guys, so this is Thomas here, and today I'm actually going to be sharing about this company called Plains All American Pipeline. Okay, in short, the stock ticker symbol is actually PAA. Alright, so this business is actually involved in the oil pipeline transportation. So as we all know, the crude oil that we have that we are actually alpha investors, we are also talking about it from time to time, and then now there's this Iran this back and forth with Iran and US, alright, this uncertainty over the crisis of war, and then the oil will fluctuate, alright, from one price to another. So as we talk about how we're going to trade about crude oil, I think it's important for us to also look into some of the business that's transporting this commodity all over the world, alright, and how does the oil industry actually looks like. So I want to actually zoom into this business because it's involved in the middle, alright, the middle, not the upstream, but not the downstream, but the midstream of the oil pipeline transportation business. So what it's involved in is this marketing storage business, alright, in the United States. Okay, and it also has business in Canada, and also it's involved in gas storage business in Mexican and Louisiana. But most of the revenue actually comes from its services in providing the pipelines, alright, from the oil fields after the oil is extracted out from the ground, and then it's actually transported through its pipelines. Okay, so it owns, here it says 37 million barrels. That's a huge amount of oil, terminal and storage capacity, and also a lot of 15,000 miles of crude oil pipelines, right? Now a bit about the midstream oil industry. So as you can see, upstream they have it can either be offshore or it can be onshore. So onshore they have multiple oil fields, even in the US and also in other parts of the world. But offshore, of course, in the oceans, they have in many parts of the world, different countries. Mexico, they have offshore basin also for oil. But end of the day, what they classify as upstream is actually an extraction, alright, from underground to the wellhead. So that is upstream. And then the midstream is actually involved, the midstream industry is involved in transporting this, alright, the oil from the wellhead through. The first one is from the pipelines, okay. Second is tankers transporting those oil, and then third is the use of trucks, okay. But most of the times there is actually a mix of different transportation modes as they are being helped to move around the world. And at different points where the oil is actually transported, they also have this, as you can see from the third picture here, right? This is the storage facility. So they actually store for periods of time, and then it could be used to control supply. It could also be used to meet demand when there is a need to. So oil is not just continuously being run through the pipes, but they are actually these tanks here, they are actually capable of storing different amount of oil, alright, at different times. So, and then they are also after that being transported again by pipelines, tankers or trucks, right, to this downstream facility. As you all know, Singapore has the largest downstream facility here, that's owned by ExxonMobil. It's one of the largest complex in the world. I mean, we also have the rest of its competitors down there. Shell, include Chevrons. They actually have petrochemical, refining capacities at Jurong Island. So this is downstream, whereby they process the oil, okay, and this oil is actually being made into plastics, plastics that we all use. Your SAF bottles, they are actually products of crude oil. For those who are in the army, the crude oil, one of crude oil products, and a lot of things, your perfumes, of course your jet fuel, your car fuel, all this, okay. So perfumes, all these are classified under aromatics, alright. So they are all part of crude oil products. So it is a very important ingredient, not just for fuel, but for making goods and goods all over the world. So what is this company's structure? Now this company's structure is actually very special. It's not just a public listed company, okay, but it's actually this thing called master limited partnership, all right, whereby it's kind of like a Singapore REITs, okay. It is obligated, to distribute 90% of its income, okay, as dividends. So if you're a shareholder, every year you receive 90% of their taxable earnings as dividends. Now, this is actually something that is a concession in the US, because they actually support the exploration, production and transportation of natural resources. So energy companies are actually benefit from this policy, all right, this US pro energy policy, okay, and they get to enjoy this corporate tax exemption, all right, which means company doesn't have to pay tax, all right, and it gets to keep 10% of its earnings. So that's win-win situation, right, for shareholders. So this company, by earnings, okay, as mentioned just now, it's involved in 3 different segments, okay. So transportation, providing provision of the pipelines, provision of the trucks and tankers. This actually consists of 48% of all its earnings, and then the rest of 37% is in the facilities. Sorry for that. All right, and 15% in supply and logistics. So what is actually these 3 segments? So transportation is actually mainly the use of the pipelines. Their model is quite interesting. It is actually the norm that is being used in the oil pipeline transportation. So it's kind of like, every barrel of oil that you flow through the pipelines, there's like a meter, and then they will actually charge, the company that actually uses these pipelines. So example, if another company uses PAAs, pipelines, to transport their fuel, all right, then that company actually has to pay, all right, this has to pay PAA per barrel. So it's kind of like the ERP system in Singapore, where every car you actually, cross the ERP, it's like a ka-ching, right, for the company, for the government, but PAA actually earns that. And the facilities is actually charged by storage capacity and duration. So it's kind of like parking. Facility oil storage, as you can see from just now, that container, that tank, all right. So yeah, this is brilliant. And supply and logistics is kind of like a purchase and resale of the crude oil. So they are involved in these 3 business segments. Now PAA, this is the 10 years financials, all right. We love 10 years financials taken from Morningstar. So you can see the revenue is actually consistently increasing, okay. Kind of dropped a bit over here. 2016 was actually a crude oil crisis, whereby the crude oil prices actually crashed. So this company, when oil prices go down, actually all companies are affected. But companies providing heavy assets like this, like pipelines, whether crude oil prices is high or low, actually companies would they will have business transporting oil. So as you can see from here, their earnings has been increasing, all right. It's impacted a bit here, but net income, EPS, generally has increased over the past 10 years, all right. Dividends is very high. Payout ratio, okay, remember they have to pay more than 90%, right? So right here you can see payout ratio is quite consistently above this 90%, all right. And some of the years it didn't hit, but for them to stay tax-free, they will have to distribute 90% of their earnings, okay. Right here you can see book value, $15. The company share price actually is about $24 plus. So right here, it's, if the company actually closed down today, you are actually gonna get back $15.60. All right, give a 80% margin of safety, you're gonna get about still $13. All right. Now we love strong operating cash flow, and this company also has strong free cash flow. Okay, so it's cash flow wise is very healthy, it's very safe in terms of liquidity. And based on its debt equity ratio, it is actually 0.76, so it has dropped over the years. It actually doesn't meet our criteria of 0.5 for debt to equity. All right, That's because this kind of companies, they are actually quite asset heavy. They buy a lot of steel, in order to build pipelines, right? So return to equity, this is actually fluctuating. Sometimes it's above 15, sometimes it's below 15. I would say the business financials overall is quite decent, as we can see from here. Now, the competitors. So we are actually comparing between competitors that is about the same market cap, all right, from here. And these are also companies that has that are involved in midstream, that provides oil transportation. So all of its competitors, its PE ratio, PAA, is actually at 9. So that is actually considered the lowest among its peers. And I think one of the close competitor we can actually see that is MMP, Magellan Midstream Partners, with a P ratio of 10. Market cap is not very far apart. This is 17 billion, but this is MMP is 13 billion. Okay. And most of these are US companies we're actually comparing. So that's apple to apple comparison. All right, because we want to compare between companies that actually takes its oil from the same country. So this I will show you later where does this company takes its oil from. Okay. In terms of its long-term debt to its capital, long-term debt percentage is actually considered one of the lowest also. All right, it's pretty good. In fact, MMP has a higher long-term debt percentage as compared to PAA. Okay, so this is a bit more about the projects that PAA is actually involved in. So this is actually the Permian Basin. Is actually one of the largest oil basins that's located at West Texas. So this is actually USA, around the southwest of the USA. Okay, so this is the proposed pipeline that is actually PAA signed a joint venture with ExxonMobil to build this pipeline, all right, to transport, all right, oil from the basin to external sites. So this project is actually gonna start in 2021, and as of 2019 January this year, ExxonMobil they started to order quite a significant length of pipeline to be built, and they wanted them to be 36-inch. So just to give an idea of how big these pipelines are, 36-inch is actually about 1 meter. All right, so 1 meter in diameter, and more than 1 million barrels of day of crude oil will be transported as provided by Plains Oil American. Okay, so a few other companies are also involved lah. So not just PAA, but Lotus Midstream and this Webs, they have actually come together with a joint venture. Okay, as I also have checked, ExxonMobil, they actually plan to increase a lot of its capacity in this Permian Basin. So about 5-fold. Currently is about 150, 180 over 1,000. Alright, this is actually barrels per day. Barrels equivalent per day of oil. They wanted to increase it to 800,000 by 2025. All right, and that's why they're actually partnering these midstream companies with the infrastructure to build the pipes to transport them. Okay, and to begin in 2021. And then why the Permian Basin? So I've looked a bit into the Permian Basin, and this is actually the chart that the Permian Basin supply actually increased exponentially over the past 10 years. So last time, the whole basin's production, this is the whole basin that you see just now, that whole map, their production is actually less than 1 million barrels a day. And because of the technology innovations and the efficiency has actually gone up, and also the amount of company that is actually went into Permian Basin, right, it has actually increased 4-fold over the last 10 years to about 4 million per day. Now, this is actually considered a low-cost basin as compared to many other oil fields. So there's analysis that was done, all right, because companies need to know their break-even price for drilling. So companies that drill the oil in the basin, okay, they actually have this break-even price range of $21 to $48 per barrel, okay, US dollar per barrel. So right now the crude oil price is actually about it actually fluctuating between $50 to $60, and the lowest point we have seen in 2016, if I'm not wrong, was that the oil actually went down to $48. So even with $48, these companies still have to continue drilling the oil in order to, because they're still making money. Versus if they're idle and not drilling, then they would actually incur, a lot of fixed costs, right? A lot of overhead has to be incurred. So the flow of oil in this basin has never stopped, even though crude oil has went down to low prices and it's now back to higher prices over the last 3 years. Okay, so it's actually not really a question of availability, because last time when we studied, when I studied the textbooks, they actually did mention that in the next within the next 100 years, oil will actually run out. So I still remember that statement because it's quite scary. If oil runs out, then we have nothing to power our transportation and everything, right? But actually, upon further analysis, I feel that it's more of like a availability, and it's more of like how accessible they are based on the technology today. So technology, as we know, is improving at a very at an exponential rate also, which means companies have access to even deeper depths and are exploring other ways to actually extract oil. So for example, in the recent years, there is the shale oil, the fracking of extracting the shale oil. That's another way to actually get oil, and immediately, even immediately without going deeper down into the ground, you can actually find more oil. So that is an example of how technology has improved. Now, so a bit about, since Exxon has signed this joint venture with Plains Oil America, so let's see why Exxon actually likes the Permian Basin so much. So in total, there's actually 26 companies in the area, alright, that it's mining the Permian, not mining, that is actually drilling oil in the Permian Basin. So some of these large international companies are Exxon, this XTO Energy, Pioneer Natural Resources, and Chevron, Conoco Resources. Now these companies, they are so big, so they have the lowest oil break-even price. Okay, just now we mentioned $21 to $48. Okay, but these big companies, they're able to achieve a break-even price of only 26 per barrel. Okay, so this is their cost price at 26 per barrel. So even if oil goes back down to $48 and goes down even further, whatever, any price above $26, then companies will still make money, alright, and oil would have to flow through the basin. Now this is good news, because we want to know for the next 10 years, we want the pipelines to continuously have oil flowing through. We want the transportation to be used. So this is actually a good sign. Now, ExxonMobil also plans to double its earnings and cash flow by 2025. Alright, even without oil price improvement, they are able to achieve this. Alright, so oil price today, it can stay where it is. The cost can even go down further. For actually drilling oil. Now this is actually taken from the Think or Swim. PAA. This snapshot is actually not the most recent, but it's around this price, I would say, as of today, because it's actually taken 3 months ago or 2 to 3 months ago. I'm sharing the slides again for you guys, and these are the analysts that is actually giving a rating. So most of them actually have a buy rating, a buy call on this stock. That includes Credit Suisse, that includes the street and market edge, alright, and Credit Suisse has actually a target price of $30 for this company, and the other analyst has a target of $28. Alright, that is actually quite a huge premium to today's price. Some of the pros of PAA is that because of its model, because of its master limited partnership model that we share with you just now, 90% of its earnings is distributed to you if you invest in it today. So it just recently announced a 20% increase in dividends. So that makes to 5.9% dividend yield as of this price of $24.90. So because the price has dropped a slightly a little bit, as of today it's about 24.5 to 6, so it's about 6% dividend. This is quite in line with, I would say, if you invest in Singapore REITs, you also receive about 6% dividend yield. Okay, and both REITs and this company are, of course, subjected to capital the share price changes lah. So if you take into account that, it's a bit more volatile based on share price. But I would say for this company, it has been hovering at this $24 price. If you look at the charts, okay, $24 price for quite a few months already. The company also pledged to decrease the debt equity ratio. Okay, so it has a kind of like targeted leverage ratio. Now leverage ratio is another word for its debt ratio. Okay, so it measures the amount of debt which it will free up to start returning more cash to investors. Okay, another good point is that it has, just now we shared the lowest P/E ratio among the peers, and also the joint venture with ExxonMobil as one of the largest company in the world. It's also a good point that actually that will allow a huge revenue stream for this company for the next few years. And also we do not expect the energy demand to drop in future, because oil is actually still a pretty irreplaceable product if you consider not just in terms as a fuel, but in terms of as a raw material for making products. Is cheap, so as a result, many of our plastic products are also cheap. Some of the cons about this company PAA is that as a oil company in the oil industry, all right, actually all companies are impacted by the crude oil prices. All right, so if crude oil is to go up, then it's likely that because of sentiment, traders will actually bid the price up, but that is actually for short-term trading, and it's not really to do with the business of the company, but then its stock price will be affected. Okay, another not so good point is that maybe the company is, because of its huge amount of steel that is required to be bought, and then all these pipelines that they own, all those trucks and tankers, they are actually kind of heavy in terms of their asset, and as a result, every year the depreciation cost is actually very high, because they will have to, the impairment, they have to actually the impairment of these assets will actually eat into their earnings, which would actually come as a reduction in their annual income. Okay, now I actually will not go through the charts right here, but we Alpha investors, the three of us, Yongki and me, are actually on and off. We have positions in this company because we actually trade the options depending on the stock price, and we will be going more in depth about this company in the charts. All right, so for our live webinar, we actually be talking a lot more about this company and the updates about this company. So you can always refer back to this video if you want to know a bit more about the fundamentals of this company. Okay, and that's all for now. Stay tuned to our webinar if you want to know more about what positions we have in this in PAA, and then how to trade options for PAA. All right, so thank you very much, guys, and see you.